Welcome back to the Bitcoin Layer. I'm Nick Bhatia. Today, we welcome back our friend, Dr. Jeff Ross. Dr. Jeff is a longtime Bitcoin investor, advocate, and wonderful opinion on Bitcoin and markets. Dr. Jeff, great to have you back on.
Hey, Nick, thanks so much for having me. It's great to be back on your show.
We're going to get to Bitcoin markets, of course, and I'm curious to hear what your thoughts are in this current Bitcoin bull market and cycle. I've been seeing your thoughts on Noster, so I am aware of your working thesis here, but I want to, for the viewers, start with the U.S. economy. I know that you have an optimistic view on the current state of the U.S. economy, so get into that for people. Explain what your view is on the U.S. economy, and then we will lead into markets from there.
Sure. So, man, where do I start? I think we need to start all the way back to in 2020 to COVID, right? Okay, and here's why. I think starting in 2020, everything changed, and if we go back even further, we could say back to the GFC, everything changed back in 2008, 2009. That's when the central bank sort of wrested control of the economy from the markets themselves and sort of took over from a central bank perspective. Back in 2020, COVID hit, right? And so what happened is we had this massive flash recession when they shut down all the supply chains, shut down all small businesses, made everybody stay home. And then they just doused the markets, both from a fiscal and monetary perspective, with easing, right? They flooded the money with liquidity, or flooded the markets with liquidity. That caused that huge spike down and then that much bigger spike higher in 2020 going into 2021. Then what happened in 2021 is we had that weird double peak in the economy, right? We had the economy actually peaked itself in early 2021, but Bitcoin had that peak trough when China banned the Bitcoin mining in China kind of in April-ish of 2021, and then that surge higher to the end of 2021 before everything kind of rolled over again. 2022, we were starting to go into what looked like a normal US recession. But then came fiscal dominance, the nothing stops this train from Lynn Alden theme. Started in earnest, I think, in 2022. The Fed was focused on getting inflation down, which they had a large hand in causing. But the U.S. government thought, you know what, we don't want to allow a typical recession right now. We're going to goose the economy fiscally from their perspective. So in came this massive fiscal response, didn't allow us to have a true recession. We had a little technical recession, right? 2 quarters of negative GDP growth back in 2022, but we didn't have unemployment. We didn't have a lot of the other things that go along with it. The markets realized that things weren't good, so stocks went down, bonds went down, Bitcoin went down, as everybody remembers in 2022. At the end of 22, we had a bottom in liquidity. So liquidity went from contraction to it started to expand again, and a few months later, the economy followed suit. That started this bull market into 2023. 2024, a lot of bears were talking about the recession coming in 2022. I was one of them, but then they continued talking about it in 2023 and into 2024 and into 2025. Lots of people, and I don't like to call them out by name, but I like to make fun of them as a group. These perma bears have been calling for a recession since then, not seeing this fiscal side, the response of the government basically not allowing this recession to happen. So why do I bring all that up? Where we are today is we have not been in a normal economy since before COVID. We've been in these weird blends of central control of these huge responses from the Federal Reserve, of these huge responses from the US government, and it has not allowed for normal business cycles to occur. I like to look at, as you know, the PMIs, right? So what is the ISM PMI showing? It's shown that manufacturing here in the US has been in a contraction basically since 2022. We're going on 4 years of a contraction in the manufacturing sector. That's really weird. It's unusual. We haven't seen that. As far as I know, that's never happened historically. We had a couple times where it tried to pop up and then it fell back down. The last time we had an attempted surge in manufacturing here in the US was right after Trump got nominated. Leading up to inauguration, we had that big surge. And personally, I thought, this is it. Okay, we're finally going to start taking off. The business cycle is going to start surging again. And then what did he do? They came in and they instantly kitchen sink the economy. They talked about austerity. They were ramping up Doge. Elon was highly involved, and they were going to try austerity for a little bit. The markets clearly did not like that, and we basically dumped until early April. And then they decided, okay, Trump said, I can't take it anymore. austerity is out, growth at all costs is in. We're going to throw everything back at the economy. We're going to borrow and spend, and we're going to grow the economy and get it red hot as we head into 2026. And that's where we are today. So that's a really big backstory to say, where are we now? I think now that we finally have some clarity with tariffs, although that's even, who knows what the Supreme Court's going to decide. I think the case is going to go to the Supreme Court, so we'll have an answer shortly. Whether or not they're legal and whether or not people like them, it doesn't matter. What businesses need is clarity, right? So as clarity becomes more apparent throughout the world and throughout the U.S., we should see the economy start to rev up again. So the U.S. manufacturing sector in particular is what I'm watching. And even though, by the way, I'd like to mention this, even though the manufacturing sector is a very small part of the U.S. economy, it's a very important part. So it only plays about a 10 to 15% role overall, and that we're a very heavily services weighted economy. The way to get actual true underlying economic growth is usually through the manufacturing sector. All of this matters because risk assets actually follow not only global liquidity, but they follow the manufacturing economic cycle as well. So I think now that we have some clarity, we're going to start see the manufacturing sector finally start to rev up. We saw a couple signs of this recently. So we saw the manufacturing. And I actually screenshotted this so I could have the actual numbers. The S&P Global Manufacturing PMI just came out on September 2nd. It was a nice number. It popped up from 49.8, which was slightly contractionary, up to 53. So that's, a pretty good burst there. The disappointing number that came out was the ISM manufacturing PMI. It went from 48 to 48.7. So it basically went from kind of bad to less bad, but still in contraction. But the more optimistic thing for me, and as a fund manager, I look at forward indicators much more. New orders came out and they popped from 47.1 up to 51.4. So that's very encouraging. And I think this time, for the first time, it's actually going to stick. And I think as we head into the fourth quarter, now that we have a little more clarity with what's happening with the Trump administration policies, I think the economy is finally going to take off. Now, I will say, and then I'll stop talking here, this is very unusual, right? We should have already been seeing the economy been revving up all throughout 2025, and we should have already been seeing toppy type behaviors. We should see the PMI being closer to 60 right now instead of around 50 where we are. And so it's unusual. And so I think the reason why we've also seen an unusual price action in Bitcoin, for those of us who have been around for a while, is exactly because of this. Liquidity has actually been fine for the most part. It's not crazy, off the charts high, but it's up and going to the right, which is good for, it offers good baseline support for Bitcoin and other risk assets. But the economy has been dragged and holding back. So what I'm personally, as a fund manager, really curious to see is, do we have a huge rip, a hockey stick higher, a blow off top in the economy because it's been suppressed for so many years now? Do we just have a rip in the fourth quarter? And this is probably more likely, does it actually extend into 2026? Does it go beyond these 4-year cycles that we've gotten used to? Does it turn into a 4.5 or 5-year cycle or a 6-year cycle? That remains to be seen. That's what I'm watching very closely. But coming all full circle and running about, that leaves me very optimistic in the short to medium term right now. I think the economy is going to take off. I think Bitcoin's finally going to have a chance to run quite a bit higher. I think we're finally going to see the animal spirits that people talk about. That's going to get released here in the coming quarters, and I'm looking forward to that.
Uh, Thank you for an excellent introduction. People might want to just go listen to that part once more to catch up, because if you are coming into this from, I want to understand what's going on with the economy, it is very important to zoom out. So maybe they want to take that 9 minutes and go take that one again. Before we go into the next, I want to ask you really quickly, what is your expectation on the Supreme Court decision? Because it sounds like we're going to get an accelerated time frame. Will it be yay or nay on the tariffs?
So I obviously have no insight on this, right? And so how do I weigh this probabilistically? The Supreme Court tends to lean conservative. They've been appointed mostly by conservative presidents, mostly Trump. Um, they are more likely to side with him. I have to say that personally, I think he has overstepped his bounds in calling these things emergency actions, basically. That's inappropriate. but I agree with what he's doing for the most part too. So I don't like how he's come to these decisions, but I generally like the way that they've been running it like a business, the U.S. economy after so many years of not running it like a business and running it very poorly, driving us into the ground as a country for the most part and over indebting us with very little return on our investments as a country. Do I think the Supreme Court will uphold the tariffs? I think it's a coin flip. So I think it's a little better odds than it has been in the lower courts, and I just don't know. I think if I had to guess, if I had to put money on it, I'd say that the Supreme Court will uphold the tariffs with like a 5-4 decision. I think it'll be very close, and it will be very market moving when the decision comes out. Either way.
Thank you. It's a perfect segue to my next question, which is now zoom out from the US only. How do you see geopolitics right now? The concept around the revitalization of the technology sector of the United States, building up of chip capacity, electrification, energy, drilling, all of that. How do you feel the US is positioned geopolitically today? Looking at the next 10 to 15 years, I've been doing a little bit of reflecting on history happens fast. And China, the speed at which China has passed the United States in so many things, it happened fast. It happened in only a couple decades, but it's here. So, how do you see this, Dr. Jeff, today versus a year ago versus a couple years ago? And what's your outlook?
That's a great question, Nick. And man, this is we can talk a long time about this. So
Do please, because
yeah,
this is so important, Dr. Jeff. We'll get to markets later, but I
sure.
really
And
want to know what you
yeah,
think here.
yeah. So okay. So how did we get here? First of all, and we don't really need to go through all this because I know your listeners know all about this, but the Triffin dilemma and what it means to be the world reserve currency. And what happens is over time, over decades, what happens if you are the world reserve currency is you gut your manufacturing sector and your economy comes financialized, right? And so we've basically reached peak financialization in the US for better and for worse. And I would say mostly for worse. The good side of this is basically we export U.S. Treasuries, and I know you guys in your audience knows all about this. And in return, the world funds the United States military to be the international offensive regime and dictating the policies of the world and the trade policies of the world. There are upsides to that, obviously, right? We kind of live on free money for a while. But what it leaves us with is no manufacturing sector. It leaves us very vulnerable if we should ever get to a period of serious geopolitical conflict. So, where are we right now? I look at two futures and they're happening simultaneously. And on the one hand, I'm super optimistic. And on the other hand, I'm actually extremely concerned with what's happening right now. The optimistic side is that AI is advancing rapidly, and I think that we probably have we're maybe one step ahead of China and the rest of the world in our AI capabilities right now. But, and this is a huge but, we are extremely behind in our energy capacity, in our chip making abilities, as I know you know, and there are concerning things right now. So what concerns me? Let's talk about concerning things first, and maybe we can end on a more optimistic note. I'm very concerned at how divided our country is right now. We are basically back to where we were in the 1930s, where we have a very divided culture. I mean, so I'm apolitical. I'm an independent voter. I don't ever vote one way or the other way. I lean, different ways depending on the election and who we're talking about. But from an outside observer, I have never seen in my lifetime the hatred and vitriol between the two sides that we have right now in the United States. The left hates the right, and the right hates the left, and it's unbelievable. So I think this is setting the stage with the income inequality that's going on, with the amount of suffering that people are going through because of these years of high inflation and wage inflation not keeping up with price increases. We are getting to the point where something is going to happen and it's starting to get violent. Usually, when this happens, it's possible we could go into a civil war, but I think what's more likely is that we're going to get into a countrywide war with multiple countries. Now, obviously, the adversaries are being laid out, even though, as a human, I hate the fact that we talk about things like China is our adversary or our enemy or Russia is. I'm a huge fan of humanity. I'm a huge fan of Chinese citizens and Russian citizens, but the governments are pitting themselves against each other. To me, it seems very obvious that what Trump is doing, mostly behind the scenes, they don't talk about it that much, but what they're doing is revving up the military industrial complex. So this basically has been allowed to be gutted and rusted out over the last 5, 6 decades or so. Even though we used to be the manufacturing powerhouse of the world, we are no longer even close to that. China clearly now is, and they have all of the advantage in that way. Trump is doing everything he can, almost like with a wartime mentality. Bring back advanced semiconductor capabilities to the United States, or not even bring back, get them here for the first time. Bring back manufacturing, steel, copper, basic manufacturing capabilities. Yes, it's good for the economy in general, but I think it's mostly for military purposes. We need to build ships. We need to build airplanes. We need to build drones, bring drone manufacturing to the US. I heard one stat recently that China builds more drones in a day than the United States does in a year. They build more ships, something like 30 times more ships in a year than the United States is capable of. Their energy production is off the charts and rising exponentially. Ours is flatlined as well. So where does it leaves us in a very precarious position that if we do get into a hot war with the BRICS nations and primarily with China and or Russia, I don't think we're at an advantage. I think we are probably on the decline and actually at a disadvantage. I'm very concerned that in the next 3 years, based on things I hear, and it may be because of where I live that I hear a lot of sort of military related conversations. It feels to me that we are prepping, when I say we, the United States military is prepping for a conflict with China over Taiwan in the next 2 to 3 years. And that's pretty intense, and that could be something that could spark off this hot war. I actually already think we're in a cold war with China and with sort of with Russia, but mostly with China, and I don't know that it's going that well. But if we get into a hot war, I think it could go poorly in a hurry. And that's a really long statement to say that's all of the pessimistic side. The optimistic side is the way AI is advancing is incredible. And the way that the future is sort of like after we get through this tumultuous period, which feels like a fourth turning, when we get into the first turning again, things are looking really good. I think as far as Bitcoin is concerned and AI and robotics and all these things and the capabilities of humanity into the future are something to be very optimistic about, and I'm very excited for that. But it's tough right now because we're going through a very tumultuous time, and I think things are actually going to get worse before they get better.
Over 10,000 investors downloaded the original How to Position for the Bitcoin Boom report when Bitcoin was 27K and it called for 120. The target is hit. What's next? Tour de Meester is back with the 2025 edition, refreshed for the mid-cycle moment. New data, new insights, and get Tour's latest price expectation. Plus, you'll get exclusive access to charting our way through chaos. Tour's new 30-minute Q3 2025 presentation. He explains why this bull run might just be beginning. Read the first ever mid-cycle report from Adamant Research at unchained.com/TBL. Never sell, just borrow with Arch Lending. Arch lets you borrow against your Bitcoin, unlock cash without selling, instantly access a Bitcoin-backed line of credit for as little as $5,000 for up to 2 years. There's no rehypothecation ever, and insured custody at Anchorage Digital. Stay long, stay liquid. Go to archlending.com/TBL and use code NIK, that's NIK, for 0.5% off of your interest rate. What are some of the bright spots on the energy front and the manufacturing front? How is the country going to do it?
Okay, so from an energy perspective, I think what's going to happen is we're going to get over this whole right versus left, right? So we have wind and solar on the left, and we have hydrocarbons on the right, and nuclear is kind of over here on the right too, and they're all combating with each other. What AI and Bitcoin are forcing is an energy renaissance. So I think what we are starting to come to, and I'm actually seeing some people starting to vocalize this on TV now, which is fantastic. we need all forms of energy. And if we want to have any shot at keeping up with China in terms of AI and in terms of a military perspective, we need to ramp everything up. I don't care if it's solar, wind, oil, gas, fission, fusion, nuclear, whatever we're talking about. We need all of it, and we need all of it like yesterday, as soon as possible. And since we can't get it yesterday, we need it today. And so the policies that Trump is deploying as far as deregulation and basically, the drill baby drill, like all of this kind of stuff is all for this purpose. I think of we have to catch up to where China is, and that's the military side of it. But even for just AI and Bitcoin, but especially AI, the dramatic energy consumption by AI is dramatic. It's unbelievable, like nothing we've ever seen, and it's growing exponentially. So we need to widen this rate limiting factor that is energy right now, and we need energy to just have an actual explosive renaissance here in the United States. And I think that that's what the Trump administration is trying really hard to push through.
When are we going to get fiscal measures that are more in line with this? Because we see tariffs bring back, aluminum manufacturing and steel, the Intel stake, the TSMC in Arizona, all of these, Apple and their facilities in Kentucky, I believe. We see announcements, and we hear about deregulation. I was looking into the deregulation and earlier this year and caught Besant saying that basically after September 30, certain things free up for them to then go and change. I think it was maybe bureaucratic or logistical or something, that they can't get certain deregulation going until October 1. What about fiscal packages that you talk about? Military industrial complex, Dr. Jeb. We're talking about trillions of dollars that need to be allocated fiscally from the top. Are we going to see any of that in 2026? Or do the Republicans need to increase their majority in the House and or the Senate to get some of that agenda through? Or is that not how you're thinking? And if you can, because you're independent, maybe you can layer in one more thing for me and the audience here. Do you think that left versus right matters from that perspective of, revitalizing America and challenging China, or can it go back and forth and the US still accomplish its long-term goals? Sorry to pack in a bunch of
No,
questions there.
yeah, good luck with me keeping this short, but I'll do my best. Well, let me kind of start from where you ended. Does left and right matter? It really matters until it doesn't matter. And I think what's going to happen, and this is the pessimistic view that I have, that I think is probably the most likely, is I think we're going to have a Pearl Harbor type event, or a 9/11 type event, or some sort of horrible tragedy involving US citizens that's going to bring the country together. Now, one thing that you have to admit, everybody needs to admit, however political they are, is when you have these type of events, doesn't matter what side you are at that point, everybody comes together and they unify, and it's actually pretty incredible. And I think that the Trump administration knows that, and I think that things are going to look really bad and polarized right up to the moment where something happens, and then it's going to quickly unify everybody. So what I think the Trump administration is trying to do is they want to just absolutely rev up the economy so that they can hopefully, getting back to your next question before that, hopefully win a sort of landslide in the midterm elections. If the economy is strong, they actually have a chance to do that. They could pull a Reagan, basically, and do pretty well. And then if they had complete power, then they could kind of push all this stuff through very quickly. If that doesn't happen, this again is the pessimistic side of me looking forward. I could see a triggering event happen somewhere around then, that even if we're more polarized politically at that point, some type of event, maybe in the 2026 timeframe, that brings us together and we're all unified in this campaign, military campaign. I hope this doesn't happen, by the way. I really hate war. It's horrible in every way. So taking a step further back, I agree with you. There are lots of promises of deregulation, lots of promises of manufacturing coming back. it's not happening yet, or it's just barely starting to happen. And I think it's because of residual policies and residual regulations, and people are still stuck right now. It sounds like September 30th is actually some kind of significant date, which I don't have any insight other than I've heard that date as well and heard these guys talking about it. So hopefully what happens is at that point, things get a little bit easier for companies and people can actually start putting money where their mouth is. We can actually start seeing factories being built, new energy supplies coming online, those sorts of things. So I'm like you, I'm just waiting and watching. I'm optimistic, but I also a realist that I'll believe it when I see it. So I think it's going to happen. It hasn't happened yet, though, is how I would look at that.
Okay, great.
Yep.
Go ahead. Were you going to say something
No, go
else,
ahead.
Dr.
Go
Jeff?
ahead.
Okay, so I'm ready to move on to the more market-focused portion of today. Let's start with liquidity. You mentioned it. We have a very specific view of what liquidity is and what it means today, but we also understand that people use the word in so many different ways. We're focused on asset side liquidity, which is the capacity to create new money and the capacity to refinance. Liquidity is also referred to as the byproduct of that capacity, which are global bank deposits, etc. Sometimes it's the Fed moving around its balance sheet, the liquidity portion of its balance sheet, which I know that you have modeled and have used frequently over the years. So tell people when when you approach an audience that doesn't really know the asset side of liquidity and capacity and refinancing, just your take on the word liquidity and what it means to you today in this modern financial environment.
So first of all, I got to say the work watching you progress and evolve in this space, and along with Michael Howell and the collaboration you guys have is fantastic. You guys are doing, I think, some of the best work out there right now. So kudos to you on that. That's great. When I look at it, I use just the poor man's version, right? So I'm mostly looking at bank deposits. I'm looking at global M2, things like that. And the only reason why is that because it tends to move directionally in the same as even the more advanced work does. So what I noticed is that even with Michael Howell's work, who is I think kind of the king of this space right now, with you guys are ramping up quickly in collaboration with him. They tend to move directionally, and so you can glean a lot of information just from using poor man versions. Like just using global M2 is, I think, pretty helpful. It's helpful to look at US net liquidity and those kind of things now as well, but for different reasons. We can get into that if we want to. But to your point, when liquidity is expanding, so if whether we're talking about bank deposits, global M2, M3, whatever, or if we're talking about just the movement of assets across borders, is debt expanding or not? I think the most helpful way to think about this for regular people is this. I think of liquidity like this big blob, okay? And this, because we live in a fiat system, the blob of liquidity is getting bigger and bigger over time because it has to. So as governments expand, as population expands, the fiat money underneath that has to also expand. And by money, I mean not just dollars and cents, electronic dollars too, but also what are treasuries doing? What about T-bills? Those are forms of money as well. They're collateral, right? So this big blob of money and collateral is always there somewhere, and it's always doing something. So what happens is, like right now, the US government just approved this new debt ceiling raise and this new budget. So what happens is that blob right now is moving from the people towards the government. The government is funding itself for future expenses that it has. So it's funding. It's already drained the Treasury General. Excuse me. The Treasury General account was low, and they're increasing that now. They're shooting for 850 million, and I think it's about 600, just under 600 million or so. I think they have about 250 billion. I'm sorry, 250 billion to go before they refill that. That is sucking liquidity away from the people and from the markets and to the government. The overnight reverse repo market was very high, about 2 trillion, and that's gone down to almost zero now. So it's basically negligible at this point. And then the Fed balance sheet is another story, and that's kind of flatlining right now. once the Treasury General account is topped up again to about 850 billion, then they can start spending that down again, and then that huge blob of money, liquidity, collateral, all these different forms of things, it starts to shift from the government as the government spends it and goes back out to the people. As it moves back out to the people, what happens is different asset classes that are along the risk curve, they get affected by that. So when times are tough, what people do is they focus on just US dollars and treasuries because those are the safe haven assets, and that's the best place to be when the government has the bulk of the liquidity. When the liquidity is growing and moving out the risk curve, it starts to go into stocks and other risk assets, real estate, and then Bitcoin, and then even further out into the proof of stake crypto world. That's where we're headed, I think, once we get the government basically restocks its coffers and starts spending money back out, the liquidity blob is going to move back out. And I hope that makes sense to people, because if you can kind of tell the expansion or contraction of this blob, and if it's moving towards the private markets, towards people, or is it moving towards the government, that affects what asset prices do. And it's a really simplistic way to look at that, but it actually helps me to think about what I think different asset prices are going to do, and I think it can be real helpful to people. If it's expanding and moving out the risk curve, people start taking chances and using leverage, and asset prices, especially risk assets, tend to skyrocket and go to the moon. And if it's shrinking and moving back towards government, that's the time to seek safe haven assets like the dollar, like gold, like treasuries.
It's a great metaphor for people, and I'm glad you used it because we do focus on the size of the blob and not and we are when the Treasury General count is building up or depleting, we're aware of that and its effect on risk markets. But it's a great way to combine these two. And it's an opportunity for me to share that when the government merely announces the increase in debt, that actually locks in the money eventually coming back into the public, because the size of the blob grows, it moves in the direction of the government, but then it comes back when the government eventually spends it. It comes back into the economy. And so, yes, we're trying to focus. The work that we're doing is trying to more focus on leading and less so on the flow between the private sector and the government. But these are all really excellent points, and it does help people relate how we describe liquidity and like you say, poor man's versions like Global M2, which we have extensively discussed how it matters because it's the byproduct of what we're talking about.
Right.
So they are the same. It's just very nuanced uh, differences in definition. Anything to follow up there?
I agree with you, and keep doing the great work you're doing. I've learned a lot from you, so I hope you keep going.
Thank you. We appreciate your kind words, and we are trying to be on the cutting edge because if we're not trying to challenge ourselves to think what's next and to learn more, then we're definitely not doing our job. I didn't plan this, but I have it on my desk.
Nice.
Okay, we are studying at all times, so appreciate you. Now let's move it to markets. You said something important, which is that if the U.S. economy gets going, it will lift animal spirits and therefore lift Bitcoin. This is super important because I am not a believer in the world must collapse in its financial system to support Bitcoin's future. I actually, it's quite the opposite, that the longer the fiat system goes on about its way, and continues to expand, Bitcoin's price itself will continue to respond to that dynamic. So, talk about your Bitcoin outlook here. If you can now unrelate it to the economy, or if you can't, that's also okay. But I'd love to hear your thoughts here on Bitcoin in its point in this year, this halving cycle, and its more shallow price action relative to previous cycles, its volatility declining at the margin. What are your thoughts?
So I hear a lot of people discussing, is the decreased volatility and disappointing price action a result of ETFs and Bitcoin treasury companies? Is it the result of Wall Street coming on board. And I think that people are being fooled by what's going on personally. I think that human behavior and therefore markets will always be cyclical. They'll always be somewhere between fear and greed, and they'll always be rotating between those two. So we have this period of quietness and low volatility. I don't think it's because of ETFs or Bitcoin treasury companies or Wall Street involvement, although that does play a role in it. But what it really is again, what we're talking about is this lagging economic cycle, a very unusual lagging economic cycle for the first time in history, at least in modern history. I do think that if we have this economic boom, which my forward-looking indicators suggest that we are, right? We had a spike in the PPI recently, and most people took that as a negative sign because, oh, inflation is rising. Inflation necessarily rises as economic growth starts taking hold. So that's actually a good sign from a prospective point of view. The second thing I want to bring up is we talk about liquidity leading Bitcoin in general. I know Michael Howell talks about that. Lots of people talk about that. That's my view as well. In general, as liquidity goes, about 3 months or so behind that comes Bitcoin and the price movement of Bitcoin. That's why, by the way, I've been saying, and I've been wrong, I've been saying that I think Bitcoin should be above 140,000 US dollars right now. It should be well above that based on the liquidity metrics I follow. Very surprised that it's not there, but I think again it's being held on by the economy. I think once the most market participants believe that the U.S. economy is finally starting to surge, I think the price of Bitcoin will skyrocket at that point. So that's just my personal take, is it's going to make up for lost time. It leaves me very bullish with where we are. Like I said earlier, for the next 6 months or so, I'm actually very bullish. If you would have asked me 2 or 3 years ago, I would have said we'd almost be at the peak of this business cycle, but we haven't even started yet. And so there's a chance we either have this massive surge higher in a short amount of time in Q4 and we still maintain these 4-year cycles, or more likely what it's looking like to me is the cycle extends into the first half of 2026 somewhere, which to me would mean the Bitcoin peak would probably extend and happen somewhere in the first half of 2026. One other thing I want to bring up is because everybody knows that global M2 and liquidity lead the price of Bitcoin, something that I've noticed, however, is that at cycle peaks of Bitcoin price, the price of Bitcoin actually leads those other factors. So I would caution people to be very careful. What I've noticed from past cycles is that even though global M2 is still rising and kind of looking toppy, like the rate of change is starting to slow down a little bit, even though the economy is revved up and PMIs are sitting around 60 or so, and everybody is super bullish, that's usually about the time Bitcoin peaks. So I would be very careful at that point. So that's why I, again, as a fund manager, and this is, and one other thing I like to say, Nick, and if you just forgive me for a second, I'm two different people. I'm Jeff Ross, the hedge fund manager, and I'm just Jeff, the normal guy, right? Jeff, the normal guy, all I do is I just buy Bitcoin and we live on a Bitcoin standard. I don't care what the price is. I don't try to time it. I'm not a trader. In my hedge fund, I'm trying to outperform Bitcoin. I use a long-term trading strategy, which means I go in and out of Bitcoin proxies and do things like that in efforts to do better than Bitcoin itself. Definitely better than the stock market. So when I'm usually talking about these things that sound like trading and peaks and selling and all that kind of stuff, I'm talking as the fund manager kind of guy, because that's what a lot of people want to hear. I do think it's possible that we get this peak. So if we see suddenly the economy hockey stick higher and rev up to closer to 60 on the PMIs, and we see global liquidity still moving in the right direction up and to the right, and we see Bitcoin hockey sticking, that's the point where I would start getting nervous that we're getting over leveraged and we're getting overextended and we're due for a sizable pullback and we may be headed into a recession. So I'll be watching closely for that. I will say, from watching people around the web, people that are still saying we're late cycle and we're due for a recession, like, I don't know what they're talking about, because everything I look at says we haven't even started this cycle yet. We're still waiting to get this cycle revved up again. And the best times are still ahead of us and probably in the coming quarters or so. One last thing I want to say, because I know you're an AI guy and I've been spending a lot of time thinking about this and how it relates to manufacturing and the whole, revving up the military industrial complex. I do think eventually we're going to bring back manufacturing to the US because of the initiatives of the Trump administration. I don't think that means we're going to have a plethora of manufacturing jobs. I think that most of the manufacturing gains are going to be AI and robotics led, and the companies themselves are going to experience massive gains, and it's going to drive GDP higher. It's going to drive the economy higher, but it doesn't necessarily mean we're going to have more employment. Everything I look at from an employment perspective, including today's job openings, they were lower than expected. I think that is the future. I think unemployment isn't going to necessarily surge higher unless we have a major recession. I think it's going to creep higher for the next not just years, but probably decades. And I think that, say, 10 years from now, we're going to be talking about unemployment levels sort of in the 10, 20, maybe even 30% of Americans, I think, are going to be unemployed at that point. And that's going to be a completely different world at that point. And I would love to talk to you at some point, Nick, and we don't have to talk about it now if you don't want to, but what does government look like? What do markets look like when the businesses are booming and the economy is booming, but everybody is unemployed because AI and robotics are handling the majority of the work that humans used to do? Does a capitalistic system work when 30% of Americans are unemployed? Lots of people talking about universal basic income that has lots of issues as well. Do you have thoughts on that? I know you taught AI and you're kind of at the forefront of thinking. So I would love to hear your thoughts about government and the economy in the new world.
My bias is that although the structural unemployment might be higher and the trend might go higher in this um, AI and robotics wave, I do generally believe in the reassignment of labor in that market dynamic. So I haven't I thought about it a lot this summer, and me and my students and I workshopped it. Basically, we were in this: is AI going to replace all our jobs or not? And we did as a class land somewhere in the middle, that there are new jobs that are required in this AI and robotics wave, and that the market can reassign them. But I wasn't convinced myself. I find it interesting that you believe we might be heading to 10 to 20% structural unemployment. I have thought a lot about universal basic income and its role in the future of the stability of governments. And I do believe that the probability is weighted toward that over the coming decade or decades. That the society will need a better backstop in the future, but I don't know. And I love thinking about these things, and maybe we could do an AI conversation or the future of the economy on our next chat.
Right. Yeah, that would be fantastic. And who knows, right? It's too far ahead to see right now, and things are changing so quickly. But I think these are going to become important questions for not just investors like us or teachers, professors. But also politicians. And what is the role of a politician in an AI age? And is it really going to be as dramatic as some of us think it is? And I would lean on the dramatic side. Lots of people don't think it is. They think it'll kind of hit a peak and then plateau at that point. It remains to be seen. Nobody knows who's right. It's hard to predict the future right now.
One of my 16-year-old students said one of the wisest things I've ever heard in his final presentation. He said, I can't make any predictions more than 7 to 10 years in the future, but this is what I believe. And I found it very innocent and insightful in that way, because I also believe that thinking 20 to 30 years in the future might not be the best use of my time. So I'm really glad that we spent the bulk of this conversation thinking about that next 5 to 10 years and how it might play out in the United States, because I think Americans especially will find our conversation today very useful. Dr. Jeff Ross, a good friend of the show, thank you so much for joining us once again at the Bitcoin Layer. Please tell people where to find you online if they want to hear your thoughts.
I feel like I always disappoint people at this point. First of all, Nick, thanks for having me on your show. I always really enjoy our conversations. I'm only on Noster. And so I like to tell people as a public service announcement, if you see me anywhere else online, it's not me. It's somebody trying to steal your money. So please don't follow them, and please don't send them money for the love of Peter. So I'm on Nostr, but I'm barely on Nostr. In fact, I haven't even posted in a few weeks or so. I do run a small hedge fund for friends and family. It does pretty well. But you can look that up if you want to. It's called Billshire. But otherwise, if you want to follow me, what you really should do is follow Nick, buy his great books. And can I do a plug for you? I just listened to your book on Audible, The Bitcoin Age. It is a fantastic book, and it was surprisingly good, and it wasn't about what I thought it was going to be about. I learned a ton from it. I loved you going back to the history of cryptography and all those guys and everything that has happened since. I was delightfully surprised by your book. There's a lot of books coming out these days. This is one of the few that I would recommend. And so I hope all of your listeners are buying it and listening to it or reading it.
Thank you so much for sharing that. The research on the early years of the internet and cryptography were the most insightful to me because it was all brand new information and something I felt was very important to ultimately tell the full Bitcoin story so people can catch Bitcoin Age on Audible or Kindle, or you can buy the hardcover as well. Dr. Jeff Ross, find him on Nostr and look him up. And thank you so much for joining us. We appreciate you.
Thanks, Nick.